Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 31st of March. Starting off with the FTSE 100, where it's a quiet end to the week, which may be a good thing. We've got the 200-day moving average rising. We bounced off that earlier this week. We've broken a line of resistance from earlier in the month. That's around 75.50. Above that, we're looking for, I suppose, initially the 50-day moving average area is around 77.70, and then maybe if we get lucky, up to that February resistance line there around 78.50. But the key here, holding 75.50. Below that, then there's the risk of a test or the requirement of a test of the 200-day line around 74.30. The other thing to note maybe is that the RSI right on neutral 50, so we'd like to see a weekly close for this market above RSI 50, just to give us the nod that maybe next week will be a positive one as well. On to the DAX, which has been something of a star performer compared to the FTSE and many other markets. Here we've had unfilled gap to the upside yesterday. We've got the 50 and 200-day moving averages rising. That's really created an island reversal, which is quite a feat near the highs, and really looking for this market to not only retest the best levels of this month at around 15,700, but then to head up to that September resistance line projection at 16,200. Early in April. RSI still relatively modest at just below 60, but in a good place for further upside, and certainly well above the 50-day moving average at 15,300. Looking for this market to try and take on this month's highs and progress further. Moving on to the Dow, and here we've got a situation where this market has been consolidating either side of the 200-day moving average over the recent past, but nice move up yesterday and heading towards that 50-day moving average, 33,100. Above that, looking for then 34,000, maybe as soon as the end of next month, if this is indeed the floor with the consolidation that we've had during March. RSI has gone through 50, which is always pleasant, 54 there, so that does suggest there's a bit of gas in the tank to head higher over the next few weeks. This stage only well below the 200-day line, well, really below the 200-day line, around 32,300, suggests that we'd have to test that uptrend line from October around 32,000, but looks as though that the immediate danger of downside has gone. On to Bitcoin, where we've been hoping and praying that this market can get through to the 30,000 level. Although actually, from a technical perspective, it's really 32,000, which is the big number here. 32,000, the resistance on the way down, and end of day close above 29,000. Hopefully over the weekend, maybe something like that tends to sneak. This market tends to sneak moves through the weekend. Would give us a move to 32,000, which we're hoping for. Whatever happens will be done by the end of next month. Support 26,700, very important. I don't really want to see that broken, and as below that, we're looking for a test of the 25,000 area and the 50-day moving average just around 24,600 at worst. But we've got the 50 and 200-day lines rising, so that does suggest there's decent momentum here despite today's minor pullback. Moving on to the stocks, and ARC Minerals next. I think there was an RNS today. Shares are responding well. So far, we try to break through that resistance line there from the beginning of May last year. That's around the 4 pence level, so everything really here about 4 pence. End of day or weekly close above 4 pence, and we could be looking at 6 pence as soon as the end of, probably the end of May, really, probably is the more conservative target, but over the near term, the next 1 to 2 months, up to 6 pence if we can get decent clearance of the 4 pence area. RSI's pushed through neutral 50 as well, so it looks as though the shares are having a go at delivering upside. On to Andrada, which I think I've covered earlier in the week, making progress, basically making good on that bear trap from below 3.9 pence. Above that, we were looking for 4.8, 4.9 pence initially at the 200-day line, and then up to 6 pence, ideally by the end of next month, after being so oversold and after having that bear trap from below October support there. Moving on to Chill, which has launched some new products, which I have to say I don't really understand, but doesn't really matter. Here we've got a nice breakout, a nice resistance line breakout there from back in February. That's basically versus the 4 pence area. And above 4 pence, looking for the top of that rising trend channel as high as 5.5 pence, hopefully by the end of next month, hopefully even sooner than that, the way things are going. A very positive setup here with the rally that we had in February, sideways shuffle, as I call it, above a rising 50-day moving average. That normally gives us a positive result, and we've got both the 50 and 200-day moving averages rising here. The other point to note, I think, is that we did actually have a golden cross buy signal back there at the end of February, so the technicals here very good indeed, even if market sentiment hasn't quite flipped so well. Speaking of market sentiment, we've got Canadian overseas next, and just the first hint that there could be a turnaround here. There's a line of resistance there, basically at 6 pence, and at end of day close above 6 pence. We could be heading up to resistance on the way down around 8 pence, barring any spanners in the works thrown in by the company, which tends to enjoy doing things like that. But on a technical view only, above 6, we're looking for 8 pence. Which was early February resistance for the shares. The RSI really the key there, in the sense that that's already broken its trend line, whereas we're waiting for the price to break that 6 pence level, which hopefully it will do later today. On to Celadon, where lots of people seem to be celebrating the move higher, which was actually called, I think, yesterday here on the Bulletin Board Heroes. We were looking for support to remain there, just near towards the £1 level. We've had a golden cross buy signal as well. So all that's missing now for further growth in the share price is an end-of-day close through 175, the initial March resistance. If we can get that, then we're looking at quite a decent target on the upside, probably towards the £2.40 area, which would be the top of a triangle that I'm just about to draw at the moment. Broadening triangle from this time last year. So above 175 on an end-of-day close basis, looking for 240 after the latest golden cross for Celadon. At this stage, only well below that, the low 40s really, the resistance on the way up, really delaying the closing resistance on the way up, really delaying the upside scenario. But ideally, the low 140s will hold. On to Conroy, which continues to do well. We've got a U-shaped bull flag here above the 200-day moving average. That's still falling, so we're waiting for that to try and catch up with the share price. But above that, at 22 pence, we are still looking for a move towards the top of that rising trend channel from back in the summer as high as 36 pence, and that could be hit as soon as the end of next month. So above 22, looking for 26 on Conroy. Seem to be rising every day on eEnergy at the moment. Very, very impressive indeed. We've hit our initial target here, which was around 4.75 pence. Above that, we're looking for that August resistance line there as high as 6.75 over the next couple of weeks. And I think given the way that the stock is so persistent, and we've had backing from bullish divergence there, probably one would be looking really for 8 pence, which was the main resistance area back in the autumn on this situation, but initially 6.5 pence, hopefully pretty soon. Back to Harland and Wolff, which looks as though it's hopefully finished its extended consolidation that we've had since the turn of the year, just trying to break through the 50-day moving average and that line of resistance there from November. That's around 16 pence, so really an end-of-day close above 16 pence. Could be enough to take the shares up to the top of that broadening triangle from December up to 26 pence, and we're hoping for that to happen by the end of next month. The support ideally stays now at or above the 200-day line at 13.75. You can see the RSI just pushing through the neutral 50 level at the moment. On to Jersey Oil and Gas, which revealed a decent RNS today. Was actually looking at this earlier in the week, but was waiting, rather cautiously waiting for news. Here we've got the old support there on £1.57. We've broken above the 50-day moving average at 192, and really we want to see an end-of-day or end-of-week close above that to give us the next target up to £2.25 and maybe even £2.40 over the next 2 to 3 weeks. But the key here is holding above the 50-day moving average. As you can see, if you look back, you can see the 50-day line's actually been the block on the shares since November. So we probably, if you're fussy, you'd want to see a higher low above the 50-day line, but at least an end-of-day close or two end-of-day closes above the 50-day line should be enough to flag that this is turned round. There is bullish divergence there, so an uptrend line there from earlier in the month, even though we had a lower low yesterday temporarily at £1.49. Just a couple of stocks to go now. First one is one I feel that I should have looked at before, Resolute Mining. Here we've had a beautiful turnaround here. I suppose the main break to the upside around 18 pence, breaking last summer's resistance. Above that, we're looking for as high as 33 pence over the next, hopefully by the end of next month. And the shares ideally would also stay above 20 pence now, even though, let's say, 18 pence is the stop loss. Finishing off with a stock which I rarely look at, but here we got TPX, and nice rise today on the basis, technically on the basis that we're liking this because of the break of that resistance line there from back in December at 27 pence, above 27 pence, looking for as much as 54 pence over the next 4 to 6 weeks. So a nice turnaround there, backed by bullish divergence as well. We had lower lows for February, but the RSI line heading higher. So decent setup there at TPX. That's it from me today. More updates over the weekend.